Hey guys, welcome to our first portfolio update. If you are new and just joining us on this channel, check out my video on the portfolio challenge that I'll be doing to get some more details. And what I want to do with every portfolio update is to follow a similar structure. I will talk about an important highlight that happened in the markets that week, followed by the actual portfolio update, and then my final thoughts. And so this week, the talk of Wall Street was about inflation data that had come out. The Bureau of Labor Statistics reported a consumer price index of 5%, which was the largest increase since 2008. Now, what's interesting is that the market sold off Thursday morning in anticipation for the report, but rallied just right after. And what I gathered from the numbers on the report is that this inflation being talked about isn't all that bad, and here's why. In this list, we are looking at the percentage changes in CPI for all urban consumers. And I want everyone to focus on the following key line items: commodities, less food and energy, growth in April and May 2021 to the last 5 months all rose substantially. New vehicles in April and May, same thing. And used cars and trucks just absolutely blew up. And last, transportation services, once again, a larger increase. And so when people are panicking about inflation getting out of control, they need to understand that some of this data is more skewed by a few things. And when we look at inflation for the year, you'll notice that it's the used cars, the energy products, the utilities, all getting out of control, and they are the ones running hot. But remember that gas prices in 2020 were actually trending down, so some of this substantial increase is to be expected. With the Fed doubling down on their stance that this type of inflationary pressure only being short-term as expected, it doesn't seem like it's going to be as big of a deal that it was made out to be. And with the market trading the way that it is, and all these factors considered, I think it's more important than ever that we pick in the quality companies that make sense fundamentally and avoid over allocating into those that won't see cash flows until years out. Now moving on to the public portfolio, we made a total of 5 buys and 0 sells this week. And for those of you who aren't aware or have followed my Twitter account, you can do so in the description below. There you'll have gotten my buy and sell alerts so that you can stay up to date on the moves that I make. Starting off, I bought 20 shares of Uber this week at a cost of $49.91 a share. This one was definitely frustrating as the stock opened up the week at only around 47 but never looked back early on. I'm looking to add to this one and build out a position of around 15% of the portfolio, which will total around $4,500. And currently we are sitting at a book cost of almost $2,000 and are up 0.2% for the week. Next up, I made 2 separate buy orders for Alibaba, one for 10 shares and the other for 9. We now have a total of 4,021 at a cost average of $215.52. We are down 1.8% on this position, and I'll be looking to add more if and when the price of the stock drops more. Ideally, I would like to allocate 20 to 25% of this portfolio into the stock, which would mean we have up to another $3,500 to average in. And last, I made 2 buys for a total of 175 shares of the Grayscale Ethereum Trust. Our cost average is $23.60, and we are down 2.22% on this position. And this position, I decided to start out just due to the recent weakness in the coin. I expect this to be the most volatile position we hold in the portfolio, but I'm very bullish on Bitcoin and Ethereum in the long term, so it will be good to expose ourselves into the crypto space. And one last thing to add, I will look to increase our position here if the coin continues to get sold off. So right now, I'm doing what I can in terms of finding quality companies to allocate our cash into, and I've actually found it kind of tough as the markets right now are just running pretty high and it is pretty expensive out there. All the major indexes are nearing or hit their all-time highs this week, and so I've been making an effort to look around and still have just under $20,000 to allocate our cash into, and for some reason I feel this pressure to do so, maybe because I can't have a portfolio challenge with 0 buys. There wouldn't really be any content or updates, and so I will be on the lookout. So right now, I'm doing what I can in terms of finding quality companies to allocate our cash into. And I've actually found it kind of tough as the markets right now are just running pretty high and it is pretty expensive out there. All the major indexes are nearing or hit their all-time highs this week. And so I've been making an effort to look around and still have just under $20,000 to allocate our cash into. And for some reason, I feel this pressure to do so, maybe because I can't have a portfolio challenge with 0 buys. There wouldn't really be any content or updates, and so I will be on the lookout. The first week was pretty much how I expected it to be, and I think with prices going down, it could actually be to our advantage since I still have a pretty large cash position. But of course, like anyone, I'd rather be up than down. But it feels like there might be some good opportunities to build some positions on in the coming weeks. And so that's it for our portfolio update in week 1. Make sure you check out our latest stock analysis videos on Alibaba and Uber. These are companies that I bought into in the portfolio, and it's always good to know what you're invested in.